Hello and welcome to the weekly market metrics. We are in week 40 of the year, which means we have just about 12 weeks left in 2025. I hope you all are on track with your New Year's resolutions, the ones that you made in January. Anyways, let me not bother you and jump straight into this week's market metrics. It was a short week with Thursday being a holiday. The Reserve Bank of India's Monetary Policy Committee kept the repo rate unchanged at 5.5% in line with the expectations. More importantly, the RBI revised India's GDP growth forecast for the current fiscal year upward to 6.8% from 6.5%. The central bank also introduced measures to improve credit flow, including a sharp increase in the limit for loans against shares from 20 lakh to 1 crore. This move gave banking stocks a boost and set a positive tone for the benchmark indices. Markets held on to key support levels and have begun showing early signs of recovery. Let's start with the chart overview. This was the last week of the September month and therefore I'll share some monthly metrics as well. Starting with the Nifty monthly chart, after closing in red for July and August, Nifty ended September in green with a gain of 0.75% or 184 points. During the month, it made a high of 25,448 before settling at 24,611. Key levels to watch out for going forward are the zone, which is between 25,650 and 25,800, and 24,400 should act as support. Moving to the weekly time frame, after the last week's sharp red candle, this week closed in green with a 0.97% gain, adding 239 points. The key levels remain unchanged as far as the resistance is concerned, that's at 25,670 and support at 24,337. Also talking about the weekly range, which I have spoken about in the past few episodes, we continue to be in the same range in the past 15 weeks, which is quite rare actually. Shifting to the daily time frame, we saw 2 red sessions and 2 green, but the green candles outweighed the reds, helping Nifty close above last week's closing level. Key levels to watch out for on the upside are there is a resistance zone between 25,000 to 25,100. On the downside, major support remains unchanged from last week at 24,400 and 24,350 with a minor support level around this week's low at 24,600. Starting this week, I am going to include an hourly chart with a 50-period EMA, one of the simplest and the most reliable indicators for identifying short-term trends. On Nifty, the recent downtrend from 24th September to 1st October lasted for 8 days. On 3rd October, Friday, at around 2:15, the hourly candle closed above 50-period EMA, signaling a positive bias. Moving to the Nifty monthly seasonality chart, September closed positive with 0.75% gain, though that was below the 25-year historical average of 1.22% for the month. October has already started strong with a gain of 1.15% against the historical average of 0.6%. However, we are only 3 days into the month and it's far too early to draw any meaningful conclusion for the current month. Moving to the overnight versus intraday performance on Nifty, the overnight move was muted at minus 0.04%, while intraday action contributed to a gain of around plus 1.01% for the current week. However, on a monthly time frame, for the month of September, the overnight is positive and the intraday is negative, pretty much in line with the overnight drift theory. With Nifty done, now let's move to Bank Nifty. On the monthly chart, it's very similar to Nifty. After closing in red for July and August, Bank Nifty also ended September in green with a gain of 1.83% on 980 points. It touched a high of 55,835 during the month before settling at 54,635. Key levels to watch out for in Bank Nifty are 55,900 and 56,150, that zone, as resistance, and 53,600 as support. Moving to Bank Nifty weekly time frame, similar levels hold on the weekly charts as well. It was a strong green week, fully engulfing the previous week's candle with a gain of 1,200 points or 2.21%. On a daily time frame, all 4 sessions closed in green relative to the previous day, indicating a strong upward bias. Key levels to watch are 55,800 on the upside and 54,400 on the downside, with a major support at 53,600. Looking at the Bank Nifty on an hourly time frame, it has stayed well above the 50 EMA since 1st October. Unlike Nifty, Nifty, which crossed above the 50 EMA only in the last hour on Friday. As I mentioned earlier, this remains one of the simplest and the most robust indicators for identifying short-term trends. Moving to MIDCAP Nifty, it's been similar to NIFTY and BANKNIFTY. The MIDCAP index posted 2 consecutive negative months in July and August but closed September in green with a gain of 1.2% or 149 points. On a weekly time frame, last week's red candle erased nearly all the gains of the previous 3 weeks, though this week saw a recovery of 230 points or 1.83%. Let's look at MIDCAP on a daily time frame. On the daily chart, MIDCAP, the index closed near its resistance at 12,800. There are multiple hurdles on the way up with key resistance level at 13,250. Support levels remain unchanged from last week, which is the zone between 12,500 and 12,400. Lastly, talking about SENSEX, it shows a structure similar to Nifty on both monthly and weekly time frames, closing this week with a gain of 0.97%. On the daily time frame, support levels remain same as last week at 79,800 with a minor support at 81,50. On the upside, resistances are placed at 81,600 and 81,900 zones. Now looking at the ROC table on a YTD basis, Bank Nifty continues to lead, followed by Nifty and then Sensex, while Midcap Nifty continues to remain in the red. Talking about the sectors this week, Nifty, PSU Bank and Metals led the gains this week with rises of 4.43% and 3.93% respectively, extending their strength from last week. They were followed by Nifty PSE, an index comprising of both state and central government companies. The PSE index has been trending up for a while, barring last week's dip, and it's worth taking a closer look at what's really driving it. Meanwhile, banks and commodities continue their positive momentum from the previous week. Talking about the directional bias, weakness remains evident across most indices except for Bank Nifty, which continues to show some relative strength. Nifty's medium-term bias has turned positive, while the short-term bias is just 20 points away from flipping into positive. Talking about the ranges and this week's options expiries, eyeballing the ranges, it's clear that they have picked up a bit compared to the earlier sessions. Nifty had its expiry on 30th September, covering the monthly, quarterly and half-yearly cycle. Despite the significance, it was a relatively quiet day with the index moving in just a 144-point range. Expectations of heightened volatility didn't play out as no major spikes were seen in option premiums. Nifty eventually closed flat, down only 0.1% or 24 points. Moving to the Sensex expiry, it took place on 1st October, which is Wednesday, as Thursday was a holiday. The session coincided with RBI rate announcement and option premiums held up firmly until the announcement. The repo rate was left unchanged, leading to a sharp drop in IV soon after the announcement, and Sensex rallied 815 points, which is close to 0.89%. It turned out to be a relatively straightforward day for option sellers who had taken positions earlier in the morning before the RBI announcement. Talking about the INDIAVIX, after a minor spike, VIX has cooled off and is back at 10.06. Let's look at commodities this week. In an otherwise dull market, commodities is where the action is. Starting with gold, gold surged 11.8% in September, marking one of the largest single-month gains in the past 10 years. This week, it extended the momentum with an additional 2.39% rise. Silver posted a massive gain of 16.78% for September, the highest on record, pretty close to the spike seen in July 2020. Unlike gold, silver typically doesn't trend as smoothly, but this time it could be different, who knows. For the week, it was up close to 1.74%. Moving to natural gas, it trended higher through September, closing this month with a 1.51% gain. This week, the momentum strengthened further with a sharp plus 7.89% rise. Lastly, crude oil has been in a consistent downtrend since August. This week, it extended the losses with a sharp decline of -7%. Overall, it was a short but positive week supported by upbeat announcements from the central bank and the festive season sentiment. Moving to what we can expect in the coming week, I see there are no scheduled economic events. Talking about the markets, I expect the uptrend to hold and continue. Of course, I've been wrong before, and while I'm hoping DJT stays quiet this weekend, but that might be asking for too much. Let's see how it plays out, but overall my view for the week ahead remains broadly positive. Till then, trade safe and I'll see you next week. Oh yes, if you like the content on this channel, please do subscribe. Also, a lot of metrics that I share in this video and some more are available for you to explore on a sheet, the link of which is in the description. Do check it out. Thank you and see you soon.